This is your Monex Metals Market Update with Mike Maroney.
Good afternoon. It's Monday, June 26th. My name is Mike Maroney, and I am coming to you today from the Monex Precious Metals studio. Let's do our Precious Metals Week in Preview. It's very interesting because in China there's a curse, and it states that may you live in interesting times. And if you think about that, who wants to live in interesting times? Obviously, if there's a lot of interesting things happening, some of those could be bad and some of those could be positive. But if you look at the current situation that exists in the world today, there's absolutely no doubt that we live in very interesting times. Now, in the precious metals market, we had something take place today that's happened one or two other times in the past, and we're not quite sure exactly who was the major player that forced the market down from an intraday high of 1258 to a intraday low of 1236. Let me give you a little bit of background. At 9 a.m. London time, someone put an order in to sell 54 metric tons of gold market. Needless to say, who would sell 54 metric tons of gold market when obviously once you do that, you're probably going to get the low of the day? And inevitably what took place is the market dropped from 1258 all the way down to 1236. Interestingly enough, approximately 1 minute later, the market popped back above the 200-day moving average, which sits at 1240, and is currently trading right in between that 1240, 1250 price. Now, some people believe it was a mistake. Some people even call it a Muppet trade because they have really big fingers, and when you go to push a button, sometimes you push the wrong one. But no one is quite sure what took place except for the fact that we saw gold drop $21 in 1 minute and spike back above the 200-day moving average, but close below the 100-day moving average, which sits at 1249. Now the discovery process will take place. People will be trying to find out, was that a real sell? Was that a fabricated sell? Was it a mistake? Only time will tell, but what it may have done is it may have shown the resilience that exists in the gold market. If somebody can sell 54 metric tons in one fell swoop, and the market can absorb all of that product and only drop $8 or $9 in a day, that shows that gold is well positioned for a move higher once we start to see more positive evidence as far as what's going to happen with the Fed and inevitably what's going to happen with the Federal Reserve's balance sheet. Now, in the silver market, silver was trading at 1676. When this trade took place, the computers, or what we call the black boxes, lit up and silver traded all the way down to 1622. There was supposed to be some big buy orders in down around 1622, and sure enough, what we saw was the market bounced off at 22 and ended up coming right back up to 56, 55, right in that general vicinity. Another signal that, even in the face of a tremendous blow off to the downside, there was enough strength at the lower end of the range to see both of these products bounce back in price. Now, I want to hearken back to something that we spoke about a few weeks ago, where we were talking about why billionaires were buying gold. And I want to talk about Ray Dalio's statement. Ray Dalio is probably one of the best hedge fund managers in the world and an absolute incredible track record. But I think his statement was so positive as far as the overall situation that exists in precious metals. Ray Dalio stated that everyone should have somewhere between 8 to 10% of their portfolio in gold. And when asked why, he said, if you don't own gold today, you obviously don't understand economics or history. And if you think about everything that's taking place, stock market trading an all-time high, and real estate market back up to 2007 and 2008 highs, all of these things are priced for perfection. We have a lot of geopolitical uncertainty. We have a lot of political uncertainty. We have the debt ceiling situation coming up in August. And we have a lot of issues as far as how are we going to sell bonds and have the Federal Reserve cut back on a $4.5 trillion balance sheet. It could get very dicey and we could see some real volatility. And when volatility picks up, people have a tendency to move to safe haven, and that safe haven is gold and sometimes is silver. I think right now silver may be being affected by the fact that the industrial commodities in general have all sold off to lower levels. And because silver has a dual persona, or some people like to call it schizophrenic, it has a tendency to move to the downside much faster in this type of environment. But lo and behold, what comes out of this situation is every once in a while, you'll get a tremendous buying opportunity at a very low price. And when you can do that, then obviously it's time to pull the trigger. And in order to do that, typically you need somebody that has their finger on the pulse. And that's what you get when you give Monex a call. We have account reps that literally work 10-hour days monitoring the market activity so that they are available for you to make sure that you're on the cutting edge as far as information is concerned. So please, give us a call at Monex today so we could talk to you about how you could put gold and silver in your portfolio. Thank you.